Somebody spoke, but I'm not sure who it was. Okay. We're back on, Ellie?
Yeah, we're now live.
Thank you. So we can move on now to item 7, which is a Housing Benefits Subsidy Certification Report, year ending 31st March 2020. Sue, are you going to talk us through that one?
No, Chairman, it's myself, Suzanne.
Oh, thank you, Suzanne.
Good evening. The report before you brings you the annual review of the certification process for the housing benefit subsidy claim. It's a separate process to the external audit of our annual accounts, which is why you'll see a report attached from KPMG rather than from EY. The full letter is attached to Appendix 1 for you, and on page 61 you'll see in the last paragraph there it refers to the fact that the report shouldn't be copied, referred to or disclosed except under certain circumstances, including gaining written consent, which I can assure you we did gain because we believe it's right and proper that you should be able to have the opportunity to see this report. I'd like to say that I believe this is a positive outcome for the Council and for the Benefits Service. There was a minor amendment made to the claim as a result of the review process, and that amounted to the sum of £3,581, which is little over 1% of the amount the council itself pays towards benefits. And as I'm sure you'll will appreciate, it's a very small percentage of the overall value of the 34.7 million paid out in total. So I commend the report to you as a good outcome for the council.
Does anybody want to speak on that, or can we just note it?
Mr. Chairman, just I had a brief question.
Yes, I have a brief question.
Yeah, just out of interest, when do we award this contract, and do we normally see this? Because I don't ever recall ever seeing this before. But how did it end up being different from our auditors for the main accounts, i.e. our normal auditors are at the moment at Ernst & Young, and this is KPMG. Thank you.
I'll pick this one up, Chair. That's okay. So, the external audit process and the housing benefit process are completely separate tenders. We actually went into a consortium in terms of having this tendered, and KPMG won that tender. And therefore it's a completely separate process. So in essence, some authorities do have their external auditor do it, but not because they're their external auditor, but it's because they've actually won the tender process when they tender for it.
Okay. Can we note the reports? We can note the reports. Thank you very much. The next 3 papers are all linked. You have a Treasury management strategy, a capital investment strategy, and the property investment strategy. Some of this debate is likely to stray between the 3, but we will take decisions on them separately. 8 and 9 are basically reports which are going to council, and the property investment strategy is going to cabinet. And they are all basically for us to consider and comment on. So, Sue, do you want to start us off with
Will, yep.
Treasury?
Yes, I will. So just to point out, Chair, that obviously the draft property investment strategy is separate to the 2 Treasury management ones, and Councillor Isa will be joining us to introduce that, as that's his report, not mine. But the two particular Treasury and capital investment reports are the reports of the Section 151 officer, and they're my recommended strategies. And so Suzanne's going to take you through the papers, but I think the overarching message is that other than tidying up of some clear wording choices throughout the strategies to ensure that they are clear for all those that read them, there is no overall major change in the strategy proposed for 21-22. So if I can hand you over to Suzanne, who'll take you through the papers.
Thank you.
Thank you. some of what I was already was about to say has been introduced, and to say that these papers are brought to you for comment, and that they will ultimately be added, your comments will be added as an appendix to the report when they go forward through their journey through Cabinet and on to Council for full approval on the 25th of February. They're part of the Treasury Management is part of a suite of policies, and that's indicated by a diagram in item 9, the Capital Investment Strategy. Sue has just said that the Treasury Management Policy Statement remains largely unchanged from the current financial year. The policy objective to invest prudently and with having regard to security and liquidity of investment remain the aim, with the attached to the aim of achieving the optimum return on those investments in line with proper levels of security and liquidity, which clearly you have received some insight into from our advisors, Arlene Close, and the performance that has thus far been achieved most recently in our external portfolio. I think it's important, as we've set out in the strategy, that we have a range of allowable instrument and investment types, and to point out that doesn't mean we will use all of them all of the time. And I think that follows through from the discussion that we've had with the Treasury Management advisors. I would just say that we do note that the appendices have somewhat gone out of line in the production of the papers for this meeting, and that appears to have been a system glitch which we will deal with as they go forward into their next journey. I did pick up in earlier conversation that on page 89 in paragraph 612, we'll be looking at the wording of that to make sure that it's very clear about the use of the word council in terms of what it refers to, whether it's the body of members or whether it's the organisation as a whole. So with that, I will stop as far as the Treasury Management Strategy is concerned.
Right, you've heard what's been said. Does anybody wish to make any comments other than we are content with the strategy as set out with very few changes? Councillor Cubitt.
Before I comment, I noted that Councillor Vokes wanted to talk earlier. I don't know whether Councillor Vokes wants to speak now or about what she wanted to say earlier, or whether she wants to talk now about this one.
I'll ask the question about the housing benefit outside of the meeting. I'm sure that it will be covered. Yes, I didn't know how to get hold of your attention, Roger. Sorry. I'm
sorry. I had a very limited view while we had this screen.
Yeah, I had my mechanical hand up and my literal hand up, but never mind. Honestly, if I could praise you,
I'm afraid.
Yeah, I only have a very quick question, Councillor Cubitt, if I could ask it on 628, page 92. I just wondered if, it says the authority has opted up to professional client status with its providers of financial services, including advice. And I just wondered if we could have an expansion of that to help us understand what that means.
Want me to be picking up? Do you want me to pick it up?
I'm happy to pick that up.
Okay.
Under something called MiFID, which is a requirement for us to demonstrate we've got suitably professionally qualified officers, there are two different levels. And the one which our advisors like us to demonstrate is that we have reached the professional standard. And that's that we've got officers with suitable qualification who've attended suitable levels of training. And this was brought in, I think it's 3 or 4 years ago now by memory, and it says that we've got people who can properly carry out the functions, and it's something that we need to do. And the council is fully covered from that regard, and we're actually just going through a process of reviewing that to make sure that where we've had changes in officers, we filled in all the required forms to demonstrate that we are of that suitable level.
And what's the benefits to the council of having that status?
In certain cases, you can't perform certain activities or participate with certain funds if you don't have people of that level. That's the guidance that's written into the MiFID requirements. So it would reduce your options for investment.
So is that, I'm showing my ignorance here, I suppose. Is this relating to the internally managed funds then that we hold? Is that what it's relating to mostly?
It's relating to all types of funds, but I think Sue wants to come in and add something to that.
Okay.
Yeah, so it does relate to all Treasury management activity, and it's a level of confidence that the authority can have that the officers are able to undertake all day-to-day Treasury management activity, not just certain aspects of it. And obviously we act obviously alongside our Treasury management advisors, but because we have suitably qualified staff, and obviously that includes myself as 151 officer, you know, we're able to be more effective in what we're doing, and obviously that, as Suzanne said, it just allows us to have that high level of professional indemnity.
Okay, thank you very much.
Councillor Cubitt, your turn.
Okay, so if we could go page by page, Mr. Chairman, would that be all right?
Which pages did you have in mind?
Could we start with page 64? Originally, because I note that it says that the Treasury policy statement remains unchanged, and I'd just like to go through things that I've noted that are different. They might not be significant, but it's interesting nonetheless to understand that the amendments have been made. At the bottom of page 64, it used to say, these responsibilities are delegated to the Chief Finance Officer and may be the subject of separate portfolio holder reports if there are significant changes. And now it says it would be necessary for any significant changes to be further approved by Council. Is there any significance in that? Does that mean the portfolio holder no longer has any responsibility for these changes?
So if I pick that one up, so I think because of the confusion that seems to have arisen in recent months over some of the decisions that are made, we wanted to clarify that we may well choose to, if we were doing something for the first time or something that's, you know, within the strategy, but it's not something that we've currently done, we might choose to speak to the portfolio holder and the leader and the council and cabinet, etc., in terms of some wider consultation. But if we wanted to significantly change the actual strategy, portfolio holder can't change the strategy, only council can. And I don't think that was clear in the original wording, so we wanted to just be clearer that if we want to change the strategy and diversify from what the council has already approved, we have to take it back to council. Portfolio holder cannot approve that.
So it's a matter of clarification.
Okay, brilliant. Page 65. In the glossary of terms, I see that you have amended the definition, and I'm just as a comment, I'm not sure it's beneficial to mention one of our investments in the glossary because they're supposed to be generic terms. So I don't know, just as a personal comment, I think it's odd to mention the CCLA, Local Authority Property Fund. It wasn't there before, it's suddenly been inserted, and I don't know whether it should be there.
Very happy to take that out.
Page 67. 258. You have removed responsibilities the council is responsible for. You have removed approving the Treasury management prudential indicators. That's been removed. Is there any reason?
It's part of the capital investment strategy. So the second paper on here has it written in there instead. It shouldn't have been in the Treasury management strategy. It should have been in the capital investment strategy. Okay. The prudential indicators don't form part of the strategy.
Okay. And then in 3.3, you used to say that we were a member of SIPFA, but now that doesn't state it. Are we still a member of SIPFA?
Yes, we are.
Okay, brilliant. Then on page 70, you have, page 261, you have introduced the word direct, interestingly, and I just wondered whether you could talk us through why you've changed that, because it does have an impact on the meaning that it was and the meaning that it is now.
All right, which paragraph are you in, Councillor
I'm referring to para 9.3.
So that was trying to have clarity between what the Treasury management strategy was doing and what the property investment strategy does, because they're two very different things.
Okay, so So the clarification is that because historically property investments were in the non-Treasury management, but now because we have an investment in the Treasury management, you're just clarifying and qualifying the property investments in the non-Treasury as direct. Is that correct?
So what this is saying is that when you directly invest in property like you do in the property investment strategy, we take all the risk, and therefore it is far riskier than actually investing in a pooled fund where that is actually diversified further. So whilst you get less income from a pooled fund, you also get significantly less risk. So if that's not clear, we can kind of think about the wording of that paragraph.
Right. I mean, okay. I mean, actually, there is an alternative view, which is that if you invest in a property, it can never be equal to zero, whereas a fund can go bankrupt and be equal to zero. And I certainly know from personal experience with a fund that I was a trustee of a long time ago that an investment was made in a fund and it ended up being zero. So I hear what you're saying, but there are, I suppose, there's two different views on that. Page 71. This is all changed now because, of course, Arling Close had a very specific remit. And their remit was that they were responsible for the day-to-day treasury management. And KPMG was responsible for the external funds. And they were responsible for giving us all the information. So up to date, we didn't need to differentiate between security of internally managed investments and externally managed investments. And I suppose what I'm interested in is, since, and we made a reference this last time we had Audit actually, is that since they advise us and then they evaluate us, it's almost like they're evaluating their own homework. Now, obviously, with regards to their views on external managed investments, they give us a great response, and that's interesting, and it's good because, of course, all the investments except for CCLA were invested as a result of KPMG's advice, not Arling Close's. But nonetheless, that is a difference in the way the structure of the report is. And specifically, I wondered what people's views were with regards to the returns yields on internally managed investments, where we score a 2, because I don't recall us ever scoring a 2 before. Page 72.
Can I just comment on that before others come in? So the reason why we've scored 2 is because this is where our variety of long-term investments matured and there were no activities for us to actually reinvest in, which is one of the reasons we looked at alternative investments. So that's not a concern to me. That's just a mere reflection that we weren't able to invest in the same types of funds.
Okay, brilliant, thank you. Page 73, thank you, Sue. Page 73, the Treasury Management Strategy list, 12.1 has changed and cash flow management's been removed. And also limits have changed for money market funds and for counterparty funds. So I kind of, on the counterparty funds, if we just start off, in view of the fact that we're heading for a double-dip recession and risks are definitely going up the scale, not down the scale, is it wise at this juncture that we increase our counterparty limits?
So it's just this one limit in terms of, so this was something we did at the beginning of COVID. We needed to, because we were unsure what our cash flow would be during the year, because we weren't really sure what we would get in terms of council tax collection, business rates collection, etc. We were concerned that we wouldn't hold enough funds to pay for all our services and our expenditure during the year. And our money market counterparty limit was too low. And therefore we needed the ability to hold more liquidity and hold more cash. And therefore we had to change the limits during the year. And given that COVID is likely to be with us for probably at least some part of 21-22, and still need to have the ability to hold more in cash if we need to, that's why we're still recommending that we contend the change that was made during the year as part of my delegated authority. I'm looking to continue into 21-22 in case we need to be able to hold more in cash.
So in terms of the counterparties, who would those be then, if you wouldn't mind, Sue?
So we have a variety of different, we don't tend to invest in banks, obviously, but we have a number of different funds, which are probably listed in here actually somewhere. But they just allow us, at the moment, we only hold £5 million with each fund, but there are so few money market funds that we would want to invest our funds with. We want to be able to hold more with them. Some examples.
Do we get money? Do we get more with a money market fund than we would with a bank?
We don't go with the banks because their security is less. So in terms of our liquidity cash, for example, we've got Goldman Sachs, BlackRock Sterling, Morgan Stanley, Invesco short-term liquidity. They give us a slightly better return, but obviously they're more secure, and we wouldn't necessarily look to go with banks and building societies. We go with these types of funds.
Yeah, actually, because if when we get to, I'll get in a minute to that about this refusing to or not wanting to do banks. I mean, in my world, Goldman Sachs and Morgan Stanley are banks. So I know that historically, when we had talks with your predecessor, there were issues at some times with regards to during the crisis earlier, question marks over some of our banks. But I mean, our banks have got very high ratings, a lot of them. And I just wonder why we're so averse to banks at the moment and building societies.
So we have, so obviously we have our regular meetings with Arlene Close, who do a complete suite of information for us in terms of bail-in risk, etc., with all of the banks and building societies. And obviously we pick the ones that are actually, for our purposes, provide less risk of us having to be, of our investments being subject to bail-in.
Okay, thank you. So anyway, so then cash flow management's been removed from the Treasury management strategy. On page 73. It was 8 and that's gone.
So cash flow management is just part of our normal day-to-day activity. So we can put it back in again for clarity.
No, I mean, it's just that I thought our strategy hadn't changed, so I went through it and compared it to what it was before, and I'm just interested.
So we've made no major changes to the strategy. We've just tidied it up. But if you feel more comfortable with saying cash flow management, we can put it back in. But it's not.
I don't have a strong view either ways. I'm just intrigued as to why it was removed. Okay. That was all. Okay, in terms of page 74, there's been an addition to the strategy. It says here, so what you've done here is you've added, so as the longer term diversified credit fund, so 13.4, you've added and property funds to enhance returns.
Yeah, just to make it clearer, obviously that's my statement of the strategy, and I felt that a number of the questions that were raised recently required that to be clarified.
Okay, and same with 13.7, you added property funds there.
Yeah.
Okay, page 75, there's a typo. 16.1, it should read, the main risks at this stage. That's what it used to say. Page 265.
Yeah.
It's just minor.
Okay, thank you.
And right, Reits, you've removed Reits as being unsuitable. So you've changed the glossary and you've stated that. And is that because of COVID and the markets? Because you also said earlier that despite the fact we're leaving the allowable instruments unchanged, it doesn't mean that that's a free-for-all for everybody to go into them. But nonetheless, you've singled out Reits, or have, I don't know how to pronounce them. And I'm just interested in why they're being treated differently.
So when we were looking at the variety of different funds, these are ones that Arlene Close do not recommend that we include at the current time. So therefore, we've removed them.
Okay, cool.
We've never actually invested in them,
no,
but they're unsuitable.
Yeah, because they were part of the property fund, which we hadn't invested in either, and they were referred to in the glossary before, but now they've been removed.
Yeah.
Brilliant. Okay. Okay, so page 83, the loan, the 2.2 loan. Now, this wasn't identified as a resource or treasury management portfolio requirement last year, but it's now come in, not mentioned last year. So page 83 is the EM3 Eli Lilly loan. And it says it was taken out during the year. But that's not strictly correct, is it? I'm a little confused because I understood that it was actually drawn down in 2018.
No, it was, so we received the funds in December, I think it was December 2019, and they came into effect on the 1st of April 2020. So you're absolutely right. Although it is during this year, we've drawn it down during this year, effectively, in terms of strategy, and therefore we want it to be involved in the 21-22, but we can make that clearer.
Yeah, because there were actually two parts, weren't there? Because actually there was a 1.8 in 2018, and then there was an increase, was there not?
We drew the whole lot down at the same time.
Oh, okay. Okay. Brilliant. Brilliant. Okay. Right. Treasury management practices. Do we as a council ever get to see the treasury management practices?
I thought they were in here.
They're a defined term, but I couldn't. Maybe I'm being stupid. Well, I'm probably being stupid. I couldn't work out what they were per se, other than being called treasury management practices.
Okay. So if you go on to page 78, is the Treasury Management Policy Statement, TMPs. So Appendix 1 is those.
Oh, okay, so that's what a treasury management practice is.
Yes. Sorry.
Oh,
yes.
okay. Okay. Okay, thank you. On page 83, just very, very quickly, table 2, 3.4, it's got property fund at 10 million. And we come back to age-old question, is it 10 million that we should be recording there, or is that 750,000 cost? Should that have been debited?
No, so this comes back to that point again, that it has a statutory override where it's reversed back out again. So for the purposes of the accounts, it's still 10 million until we dispose of it. Okay,
cool. Hokey cokey, and I'm almost there. Sorry, everybody. Page 89, 278. So of course, this is another one of the changes. So last year, we explicitly had KPMG as the investment advisory for external funds. So that would have been March 2020 and full council February. Now that's been removed. So we now only have Arling Close. So the CCLA investment, which was bought in December 2019, would have been governed by the KPMG external advisors at that juncture, not Arling Close. Is that correct?
So KPMG only advised us on the two specific activities that we asked them to do, and then after that they continue to monitor that activity. Their last report that they gave us identified that the investments that they were monitoring that they had put forward no longer fully met the Treasury management strategy. So that was part of their last report that they gave to us. And therefore, at that point, we were looking for other investment opportunities, and clearly the CCLA is an Arling Close suite, it's within their suite of activity, and therefore they advised us, because they are actually our Treasury management advisors, which includes both short-term and long-term investments. So it was perfectly acceptable for Arling Close to provide us some guidance around that, and therefore also met the previous advice from KPMG that their suite probably only partially met our Treasury management strategy at that point.
Okay. Because I thought there was a very specific delineation in terms of responsibilities that were very clearly in our management strategy up till and including this year, where Arling Close was internally managed Treasury and KPMG was externally managed Treasury funds.
No, it wasn't that specific. And I think what we've established is Arling Close were also undertaking the same activity as KPMG in terms of monitoring all of our funds. We just hadn't asked them to report on it. And separately, we were paying an additional £18,000 to KPMG to monitor those funds. And therefore, we were paying for it twice. So all we've simplistically done is asked Arlen Close to actually report the information and have adjusted their fee accordingly, making a saving overall to the council of £12,000.
Okay, brilliant. Right, page 91. Thank you very much, Sue. There's been a typo, so para 6.26 is repeated. So 6.22 and 6.26 are the same, I think. And then there's a paragraph that's disappeared, which is that the council will allow all previously purchased investments which are held as a result of investment decisions made under an earlier year's approved strategy to be held during and then the years. That paragraph's gone. So I wonder whether you could talk us through why that paragraph's been removed.
I don't think it made any sense in the strategy. So it's just about tidying the strategy up, because obviously the strategy is what it is. We hold the prior year investments anyway. I think it was a rather random statement. Okay,
cool. And then the money markets fund is a new para 6.25. That's a brand new fund. So you've inserted that. That's a new para.
So obviously it's not a new fund because obviously we use market money funds all the time, but again, it's just about clarifying and tidying up the strategy. And obviously we tend to get a template as well from Arlen Close, which gets updated in terms of best practice. So we tend to adopt where we can.
Okay, brilliant. Oh, and I mentioned, I forgot to mention, low volatility net asset values being removed from the organisations and securities in 6.21.
Say that again.
Low volatility net asset values.
So again, that's a tidying up of the wording from Arlen Close.
Money market funds called low volatility net asset value, LVNAVs, that's been removed.
Yeah.
Okay, cool. Now on page 92, 7.2, it says the council is expecting to have total external borrowings, but we know it's already got it because it had it since 2019.
So this again is about trying to clarify the point around the £50 million borrowing limit. So this works on the basis that that borrowing limit is actually for long-term and short-term investments, but we only expect generally to do short-term borrowing, and therefore also want to say we're only expecting to have external borrowing, external long-term borrowing of 2.2 million, which is our LEP loan, just merely saying at this point in time, the capital strategy does not expect to do any other borrowing.
Okay, brilliant. And then finally, page 95, this is, I suppose, I mean, I'm afraid it's obviously my stupidity, but this is exactly why I've been confused until your explanation regarding Arlen Close, because up until and including last year, this sheet was different and it had 10.1 and then it stopped at seminars and training events. So Arlen Close was responsible for all of the bullet points until seminars and training events. And then there was a separate paragraph always up till and including, which then said the council has contracted KPMG to provide asset allocation advice and monitoring services for the externally managed collective investment schemes that are used by the council. So this performance monitoring of externally managed investments was not part of the Arlen Close suite as per our paper. Now, obviously what you're saying is that the paper was wrong. And actually, they did have responsibility for our external and evaluating our external. So I'm very happy with your explanation. It's just obviously it obviously needed clarifying.
Yeah, that's absolutely right.
Brilliant.
Well, thank you very much, Councillor Cubitt. That was a very thorough reading of the Treasury strategy. But I think with those changes that Anneli has suggested, none of which I would object to, we can certainly note the report as it stands and pass any comments. Hello, Councillor Taylor, thank you. Couldn't see you waving for a moment.
No, that's okay. Thank you, Chair. I just wonder if I can sort of make an observation firstly on 2 points. One is about the training for members, which is mentioned. And I know that in the past there's been sort of like a workshop-y event on sort of treasury management, and but it is still at quite a technical level. And I think there is some value in having some additional training sort of at a more base level in terms of it, because it is quite different the way the finances have to be structured in a local authority to what you might experience in a normal organization, with sort of the separation of certain things and how they get written up and written down. And so a real sort of you know, schoolboy sort of introduction, I think, would be really useful. And also for some members, you know, just really understanding the difference in sort of things, you know, well, what is a bond? What is an equity investment? Because I think that, you know, not all of us come with the same life experiences to the council. And so I think that would be useful to include that kind of learning and training, you know, either if for people who are on audit, or perhaps more generally anyway, as part of the induction process. So I'll just leave that as one observation. And perhaps another in terms of the way we present policies and when they get amended. I know it is a real fag, but sometimes it can be helpful for people if we actually see the amendment, so things that are deleted get crossed out, where, you know, the new replacement text is in, perhaps sometimes in a different colour, and so on, because it just makes it really clear what is being changed. And therefore, you know, I mean, Councillor Cubitt clearly spent hours comparing two documents, and I think her time would probably have been better spent focusing on the changes that she was bothered about if she could find them more quickly, if you see what I mean. And the same for me. So I mean, certainly in my previous experience, you know, when I used to work at the Law Society, that was a common practice that we did, because it made it very clear to board members that we served and to practitioners what was changing. And the same when I was drafting regulations and things like that, for example, we used to do that. And I think it is helpful to do that, and it stops misunderstandings, and also from my own point of view, it enables you not to miss anything, you know, in the sea of it. So if as a council, as sort of an administration, we're able to think about having a policy on how we do that right across the board, I think that'd be really, really helpful to members.
So on those 2 points, so in terms of the induction training, we are doing a wider finance introduction, which includes a more basic element of treasury management. So it's not linked necessarily to our strategy, it's more about what is treasury management and how does it work. And we want to include that as part of all members' induction. And obviously we can then do any more specific training for the Audit and Accounts Committee, although we would want to be able to make that available to any member that wanted to attend. And absolutely, interestingly, in terms of some of the council papers that are going, in terms of the budget reports, it is track changed. So we can certainly take that on board in terms of future policy changes.
In terms of member induction training, I've always thought that new members are usually better informed than some of the existing members. But on the update, I think where changes are made, if we could also have a note of why the change was made, that would have answered a lot of Audley's questions. So not just what has changed, but why it changed.
I think that would make a really untidy report. Happy to talk you through them. We can actually take you through the report instead and actually give the explanations as we go through it.
Whichever. But training certainly is an issue for the committee. It's important that the committee is trained up. We used to have a session prior to the accounts being presented, when we went through them and actually had the accounts explained to us line by line, page by page, before we approved them. That was always useful. I noticed we didn't have it this year, which is probably COVID related, but it would have made a fairly lengthy additional meeting, but it's a shame we didn't have it. Okay, Treasury management, I think we can now move on. I think.
Yeah, could I ask a question?
Councillor Vokes wants to speak, and me. Yeah.
I keep looking around.
Okay. Thanks very much. I just wanted to note, really, on pages 71 and 72, which is summarising the performance, if you like, of our Treasury management over the last year. And I feel it would be a shame not to note that our officers and their advisors and cabinet members, I guess, have, from my perspective, done a really good job this year, all things being equal. It's been a difficult year, and 1010 does talk about the council being the 4th highest in benchmarking results sorted by total return. I realise that's one aspect that one could say, fine, that because we've got a lot of Treasury management, it sort of takes us up there. But nevertheless, it's been a difficult year, and this report does give us some assurance that even in a difficult year, it's gone quite well. I just had one question, which was relating to the internally managed investments in 10.8 and the third point there about the score 2, which was out of 5. And the explanation there saying that there was a number of high yielding investments which had matured. And I wonder if I could rather cheekily ask whether our expectation is that we would go back up to 5 in the coming year, is that sort of already in train and happening because we've got with suitable alternatives identified, etc.
I think that's covered by the investment in the CCLA.
Indeed, but it'd be quite nice to hear that.
So obviously commented on this one in terms of because they matured and those same types of investment weren't available. But the second element of this bit, because obviously it's about our internally managed investments, which includes our money funds, obviously we made a decision as well not to continue we wanted to hold more cash as well. So our alternative investments obviously were the property fund. And obviously at the moment we're holding higher levels of cash. And at some point we will need to obviously then, assuming that everything settles back down and our cash flow goes back into its normal cycle, we will then be looking for further types of investments in this area, and therefore, yes, we would expect that score to go back up.
So you are expecting to make that decision in what kind of time frame?
So at the moment, we're keeping, as per what we mentioned in the strategy, we're keeping the money market fund counterparty limits higher. We will probably do that for probably about another 6 months until we have a real understanding of what the longer term impact of COVID is on our cash flow. At which point if we feel confident in terms of converting some of that short-term investment into a longer-term investment, we will then make that decision. At the current time, we want to keep it liquid.
Okay, that's great. Thanks very much.
Councillor Cubitt, you still...
Yes, sorry. So just finally, I mean, certainly we were an extremely conservative council, and our Treasury investments were in gilts ostensibly until interest rates dropped. And the external investments were really done under duress because everybody realized that we couldn't get any of those long dated, high paying gilts, which were ostensibly government risk. And I think I mentioned we dodged the Icelandic bank crisis, we dodged the derivative crisis, but we were incredibly cautious and prudent in terms of what we were prepared to invest in. And I think that Arlene Close made reference to that in the earlier comment, in that, you know, we wanted a balanced portfolio investment where the capital was protected and the return was as much as could be with protection of the capital. And I just wonder what the committee understands our strategy going forward is, because I would hope very much that that continues to be the council strategy going forward, a balanced approach with preservation of capital investment and trying to get income, but not chasing income at the detriment of the capital.
That's always been our strategy, Honolly, and I don't think that will change. But in this day and age, it is a balance between yield and risk. And providing that the element of the fund is held for a lengthy period, we usually win out in the end. But we have to take some risk. Councillor Harvey.
On the basis of what Annalee has just said, could I ask Sue, is there anything in the strategy she would point us to that changes that? Or does she agree with Annalee's perspective in terms of it? The strategy is balanced, the portfolio is such that it's low risk in that sense, and that we're doing exactly that in regard to our capital.
So I think it's fair to say, we, as Stephen mentioned in his presentation, we manage it as a portfolio. So when we're looking at our potential investments, we will look at it as an overall portfolio in terms of that capital, look at the risk in terms of how risk averse are we being, is that still appropriate, alongside the fact that a key stream of the administration's budget in terms of the multi-strand approach to close future years' budget gaps is to maximise within our strategy the income returns from Treasury management to support the provision of frontline services. So the strategy is unchanged. There is scope within the strategy, if you like. There's a range of things that we can do within it. I think Councillor Cubitt is correct in terms of we probably moved slightly more towards slightly higher risk but higher return, but certainly within the suite of the portfolio and the overall capital value, we're still content that that still meets the strategy. So there's no plans to massively diversify away from that. And as I've already mentioned, if we wanted to change the strategy, I would have to take it back to council.
Councillor Faulkner.
Thank you, Chair. Sue, could you just clarify that we as a local authority are precluded by law from investing in equities and their derivatives, which in essence means that we have very restricted opportunities for investment anyway. It puts us into the type of things that we're already investing in.
So we can invest in equity funds, but they tend to be capital expenditure. But you're absolutely right. What we would safely consider our investment suite is much narrower than a private sector organisation.
Okay, Councillor Taylor.
Thank you, Chair. I mean, just on the question of risk, I mean, I do note on page 75 of the report, you're mentioning here that risk assessments are completed and reviewed, and there's a sort of the sort of red, amber, green, the RAG sort of system is being used. I mean, one of the things that many of the organisations that I work with as well in terms of demonstrating their appetite for risk, as it were, is to do that sometimes by the use of graphs, diagrams and pictures, by sort of setting out what would be regarded as sort of a high risk when you get a combination of, massive risk, but, big returns, but sort of a real risk on capital, so that people can actually see and understand how those balanced decisions get made. And I'm not because although I think that we have a sort of collective understanding of what we think our appetite for risk is, I'm not sure that we actually have that clearly stated in either our risk management policies, or certainly I haven't found it yet. It may just be that I haven't found it yet, but I think that sometimes is a useful thing for members, and a clear guidance and justification for the decisions that get made.
So apologies. I think we have it in the monitoring reports. So when the Q3 monitoring report comes in March, we do have all that benchmarking graphs in there, so you can actually see how we are comparatively doing compared to the different types of investments.
What might be useful as well is setting that out in terms of our appetite, not just our monitoring, our initial appetite as an organisation for risk, and how we might describe that.
Okay, so we'll look at the wording again. I think we do describe it in the beginning paragraphs of the report, so we'll see whether we can be more clear about that point for you.
Okay, thank you.
just very, very briefly on that one point about benchmarking, I asked Arlene Close very purposefully the question that I did ask with regards to the benchmarking, because in view of the fact that our investments are not investments necessarily held by any of their other clients, it rather renders the benchmarking difficult, to say the least.
Benchmarking looks at the overall types of instruments and the overall returns, etc. So they can still do a comparative benchmarking for us in terms of our returns.
Okay, cool. Thanks.
Okay, I can't see any more hands. I think we'll just pass those comments on and be added to the report that will be going to council. Right, agenda item 9, the capital investment strategy, actually starts on page 123 and then continues on page 97. As Suzanne said, there is a little bit of a mix-up in the page ordering. But the recommendation to the Audit and Accounts Committee, this committee considers and provides comments on the draft capital investment strategy. So is it Suzanne or Sue that's going to talk us through?
I'm going to start, Chair. So thank you for pointing that out. Yes, the covering report explaining what this is about has found its way to the end. So that's, again, bringing this report to you for your comments. And again, it will go forward to the report. Your comments will be appended to it when it goes forward to council in February. This strategy is still like the more so than the Treasury management strategy. We've been doing more work on this as it goes through. One of the things was picked up earlier in terms of Prudential Indicators, and now firmly in this report, which is actually where they properly should be in terms of the way in which we set out our reports. We are going to update it further to include a Prudential Indicator that relates to borrowing costs. And this indicator takes into account the income on our external investments as well as the financing costs. And clearly we've had a conversation about the Eli Lilly loan, which is effectively our only external borrowing. So as a consequence of that, when you take into account the income we do get on external investments, that indicator actually works out negative for this council, which isn't a bad thing. That's actually quite a positive thing. And in some respects hasn't been material to us previously because we didn't have any external borrowing. But in order to be fully compliant with SIPFA's Prudential Code, we will include it, even though it will look slightly odd when you see it in the next iteration of this paper. The capital investment strategy covers anything other than the non-treasury investments. And obviously that will include things like service-based investments and investment properties. And as we've alluded to earlier, the property investment strategy is a subsidiary to this, and you'll be going on to that in your next item. The thing that we're still working through is that some of the numbers will have some final changes to take account of the proposed capital programme budgets and the associated funding with those. And those are still being subject to some amendments as we've gone through the budget preparation process, and they will be included into the next round, including where we've done some amendments to phasing across the whole of the capital programme over the years. And the vast majority of that rephasing sits within Sue's delegated powers as 151 officer. None of that will be material to the overall strategic approach. And I note the comments that were made in the last paper in terms of we will draw out for you next time some track changes and reasons for changes. So I can't sort of do that for you on this occasion. So it is there for your comment. And those are the things I wanted to draw to your attention.
Right, I'll now invite comments, starting with Councillor Cubitt.
Thank you very much, Mr. Chairman, and thank you, officers. Right, page 103, the table 1, capital expenditure. In the previous year, Many Down was down as a total of 3.9 million over a 5-year period. And I'm just wondering why there's now this 14 million in 2021-2022, when everywhere it implies that we were expecting 30 million and that it has been reduced because our external partners have decided to use alternative sources.
So the £30 million obviously was taken out as part of last year's strategy update. And all that was left in the programme was the loan notes that go along with the operation of our our joint venture partner on Many Down. The reason why it's gone up this year is because it now incorporates the land drawdown that is expected in 21-22 funded, and then in the funding you'll see the opposite side of that 12.5 million. And that's all part of the capital programme update. So it's been updated for the fact that there will be a land drawdown expected in 21-22.
Okay, just out of interest, because we thought it was 30 last year, why would we not have seen some of that 30 in the estimate capital expenditures for last year?
So it wasn't 30 last year. As part of the strategy last year, so the original £90 million was made up of a number of different items, of which 35 million pound actually was put aside for Many Down, because there was a number of activities that were expected to come forward. That particular funding was about not the land drawdown, it was about actually how they would fund the whole programme. And then they actually brought on board a funding partner, which meant that what we originally thought we would be funding, we don't have to fund anymore. And that was taken out as part of last February's budget update. So it wasn't part of this year, even the current year's strategy, that was removed. And this is merely representing the fact that there was a residual sum previously of, as you say, Councillor Cubitt, of around £3.5 million, which was for funding the working capital, if you like, of the MGC, the Many Down Garden Community LLP. This is reflecting the fact that we now have the opportunity to invest in the development company. And obviously on top of that, there is the need for us to do the land drawdown.
Okay, thank you very much. Obviously don't want to monopolise if there's anybody else has any questions. Otherwise, Mr. Chairman.
There's no other hands, so you can carry on, Ollie. Sorry, I've got Councillor Hardy if you'd like me to speak.
Forgive me for being ignorant on this point, but if we're saying that that significant amount is for the drawdown of the land in 21-22, that's the drawdown is made up of parcels of land rather than a singular drawdown. Therefore, shouldn't that be reflected also across future years at that point where that land then is further drawn down rather than one singular point? Or am I missing something?
Yeah, no, so obviously the whole point of it at the moment is this represents the land that we think we need to draw down. We're drawing it down into the MGC, which will then release parcels into the development company as and when it's required. So this is the drawdown into the management company, the top level, what used to be called Topco.
Okay, Ollie, do you want to continue?
Yeah, hi. Really, what I'd love to just touch base on now is page 116. There's a couple of mismatches, and I don't know whether it's the property investment strategy, but paragraph 4.1, it talks about our very large investment property portfolio of 304 million. And then it refers to the 272.90. And I just wanted clarification, is the difference the fact that we've got that property investment portfolio and the 304 is the combined?
Well, if you look at the existing investment property and the property investment strategy, I think those two numbers come to the 304.7.
Okay, brilliant. So that everything down to 45 comes to the 272 then? I didn't check.
Yeah, that sounds about right.
Okay, cool. So going forward then, I'm a little concerned in paragraph 5.1 because we were very specific as a committee that we agreed to a 30 million portfolio. And it was approved at full council because we refused to approve the increase to 5 million as a temporary measure, and that when there was a sale, that it would go back down to 30 million. And so I'm a little bit worried about the wording here, because it calls it originally 30 million, which implies that the 35 is permanent. And I wouldn't like it to be permanent, because that was not what was agreed. We were promised that when assets were sold, it would drop back down to 30 million.
So we can update that to reflect the same numbers and information that's in the property investment strategy. I'm more than happy to do that.
Brilliant. And interesting.
Sorry, Annalie, the information I got was that the receipts which are scheduled for 21-22 will actually include the repayment of the 2.5 million.
Yeah.
We'll go back to 30 million.
Brilliant. Brilliant, brilliant, brilliant. Great news. Thank you very much. Page 118. Just out of interest, why is Eli Lilly not on that table 5?
That's because it hasn't completed yet. It will be completing in the year. So this is what we were holding at the time. So Eli Lilly hasn't actually been invested yet because it hasn't been drawn down, which we hope to do before the end of this financial year.
Okay. So we haven't done the deal. The deal's not done. It's not signed.
The building's not
finished. It has been signed, but it just hasn't been drawn down.
No, so the building is currently being built. As soon as it's built and it's complete, we then buy the building, and that's when we draw down that last sum of money. The deal's done. It's just the building isn't complete, so we can't buy it yet. Okay,
but the loan sits within the deal that's done.
The 2.2 million, yes, that's part of the purchase of the building when we buy it.
Oh, we haven't bought it yet, but we've got a loan.
So the loan is drawn down this year on the basis that Eli Lilly will be complete this year. And obviously that 2.2 makes up part of the purchase price of the Eli Lilly building by the council. And the balance on this property investment is the property investment strategy contribution to that purchase.
Okay. Okay. Right. And then, okay, brilliant. That's all. Thank you very much. Brilliant. Thank you very much.
Okay, that looks like all the comments we have on that paper.
Thank you, Chairman. We've noted all of those.
Thank you very much. Which takes us on to item 10, the property investment strategy, the draft report, property plan 21-22, which will be going to Cabinet. And somewhere here, I do believe we have Captain Isaac has joined us. Welcome, John.
Good evening, Chairman, and good evening, councillors and officers. So I'm going to talk to the annual property investment strategy report and the annual property plan for the forthcoming year. A lot of this will be familiar to councillors on audits and accounts. We've made good progress in the further development of our overall property strategy through an annual property plan, which you have in front of you. We've also completed investment of the allocated £30 million in commercial property, which we've invested locally to generate higher returns than were available in the money markets, and with no borrowing to finance those purchases. As we've discussed, eventually we invested slightly more than 30 million, 32.49 million. But as Sue Curtin has said, that the excess of £2.49 million will be returned to Treasury management as and when assets have been sold. which we're working on. We have, as we've discussed, it includes the purchase of the Eli Lilly HQ on Basing View, and once that purchase is completed, it will mean that the investment that we've made will generate a total income of 2.31 million per annum, which is £610,000 per annum more than the original target, albeit for the smaller amount of money, 30 million. I can also tell councillors that work on the Eli Lilly building has been progressing well despite COVID, and we expect partial handover of the building in March to the company to enable it to do its fit out, and it's looking a very smart, handsome building. I've seen some photographs today, which is sort of good to see. The annual property plan focuses on the whole portfolio, not just the investment stock, and the objective is to deliver best value through improved asset management and cost management of the existing assets. An important new feature of the plan is the much greater emphasis on meeting our climate commitments as a council, especially in terms of buildings that we have direct control over, where we look to reduce energy consumption, make sure that we're using sustainable energy supplies, and ensure that the repairs and maintenance that we do are using appropriate materials and improve insulation. And also we'll need to look for ways to generate energy with things like solar panels, etc. An important goal of the strategy is to ensure that we have the right balance of holdings between shops, industrials and offices, and between long leasehold and short leasehold, so that the income for the future is secure and defensive and has growth potential. And I think that JLL will be reporting in the future to Audit and Accounts on, they've done an analysis of the existing portfolio, and I'm pleased to say that one of the positive aspects of it is defensive, because so much of it is in industrial stock. Over 50% of our holdings are industrial, which have been much less badly affected by COVID than shops and offices. We are going to be looking to increase the number of potential disposals by examining underperforming assets and those that have got high management costs or are too small. And we're going to be working with JLL, the property consultants that we've appointed, to ensure that we make the right decisions in the future with regard to our assets, and also in terms of our regeneration projects. I think it's a welcome development. I'm sure that this committee will welcome the fact that we're going to be benchmarking our property portfolio against other councils. In fact, we're required to do so by the government, but anyway, we're going to be doing it. And also against an appropriate UK property performance index. I think that JLL will be presenting proposals to Cabinet and Audit and Accounts in the near future. Clearly, there's been the very major disruption and very damaging effect on business of COVID. And that's hit commercial tenants generally, and also council tenants, especially in the malls. And I'm pleased that the property team has been working closely with the finance team and the economic recovery group to provide support, including a postponement of rent in certain instances, and general support for those businesses, and that will continue. And that concludes my introduction, Chairman.
Thank you very much, John. Right, anybody wish to make a comment? Councillor James.
Good evening, and thank you, John, for that introduction. I'm always pleased to hear about the Property Investment Fund. I think it's an important part of what we do. The first thing I wanted to say was around JAL. Obviously, we are not a commercial property investor all the time. Some of our property is held for other reasons, for social benefit, etc. So I just wanted to leave that there. That's always sitting there, that we shouldn't lose sight of that. What probably concerns me most, though, I think we are in a very uncertain time in terms of, you know, where we're going with office space, and whether it's going to be a lot more flexible in the future, and companies looking to hire short-term floors, or maybe just an office for a day, that kind of thing, as opposed to sort of the big corporate offices. Obviously, warehousing is going through a bit of a boom. Retail is going through a bit of a slump. Retail will bounce back when we've all got to park our electric car somewhere to charge for 6 hours on a Saturday afternoon, and we've got to go to do something. So it's a very uncertain world, and I just worry sometimes as a local authority, our decision-making processes, our flexibility around funds. You know, we always look at, I mean, we've already heard tonight about, well, it's a £30 million fund. That is it, it's a £30 million fund. So if a fantastic opportunity comes up because a company's pulling out, and we look at an opportunity to buy a number of units that are close together to regenerate the entire site, that we won't have the flexibility to move quick enough, fast enough, and make those very, you know, we're obviously going to make good decisions, or aim to make good decisions. We're not in that world. And so really, I leave it there. I mean, you probably can't answer it today, but it's a thought about how do we make sure that we are in a place where when there is opportunity, we can take it, whether that's disposal or often acquisition. And I think probably over the next few years, there's probably opportunities to acquire quite a bit as companies look at resizing, reshaping themselves, where we decide we might take a bit of land and repurpose it ourselves. But it's really your thoughts on, are we equipped to deal with a fast changing world where what we don't want is big pension funds to take over the opportunities and perhaps not do what we'd like them to do with it, as we've seen with some of the offices that are now flats, which as a landowner we wouldn't have wanted to happen, but they kind of have. But what's your thoughts?
Well, you make a good point, and in fact, it's raised. It's a point that's been raised this week by the purchase of an industrial estate in Winchester Road by a district council in Suffolk. So, you know, I was asked why weren't we buying it? And you know, we have been nimble in the past, and we spent the £30 million quite quickly, but wisely, and we're able to do it in Basingstoke. But we've got to make sure that we've got the right balance between our investments. We have got a very large property portfolio by any standards, and so we've got to have the right balance between those property assets that are generally held for the long term, and cash and other investments in bonds and so forth. I think that it's important that we can dispose of assets that are no longer suitable for us to hold to enable us to buy new assets. But if there is something that strategically the council needs to acquire, or the property team and me as a portfolio holder think that this is something we should be looking at closely, then of course I can make a business case to do that. But I fully understand the point you're making there.
I think Lee would have been very upset if we actually spent money on buying a retail park.
I'm sorry, just in support of Councillor Isaac. So I think it's important to note that part of my robustness statement around the budget is that I consider that until we have completed this piece of work, looking at our asset management base, looking at how we need to manage it and really understand the strategy for each of the properties that we hold, that in the main, I think we probably reached our ceiling around property investment, and would want to see a proper disposal and purchase process. We've always said, and the strategy, the property investment strategy includes this, that as Councillor Isaacs mentioned, if an opportunity comes up that actually looks like an ideal or an obvious investment for the borough, we would bring it back to council anyway, because it would be additional capital expenditure, and so therefore we can still go through a process. But it is really important that we really understand our current asset base and make sure that when we are making purchases, we're purchasing in the right area. And if we want to rebalance our asset base across each of the different sectors, it's important that we understand that. So that, as Councillor Isaacs indicated, that piece of work is incredibly important. And obviously that will help update and influence our strategies in future years. But in my reflection as 151 officer is that this is a significant income stream to the council. We need to protect it, and therefore we need to kind of rebase and understand where we're coming from before we start to do any more significant investment.
Councillor Harvey, you have your hand up.
Thanks, Chair. Thanks, John. I mean, picking up Gavin's point and perhaps making the other side of the argument on disposals, I noted what you say and what Sue has said about the fact that there's a review of the portfolio, there's an analysis of the buildings, there's an analysis of the upkeep and so on. When you come to, in a sense, have a list of those areas that you might consider to be right to be disposed of, I would appreciate, I think lots of colleagues would appreciate consultation in that regard. For example, in Daneshill and Hounds Mills in our ward is going to be quite significant if they are part of anything in there as part of your analysis. Any community buildings, any of those other social assets that are part of the analysis, anything that falls out of this work, I think a good level of communication and consultation would be really welcome, so we can understand why they're being proposed for disposal and perhaps also understand who might well be purchasing them and the reasons behind that. And I'm conscious of the amount of residential conversion that's going on in the town centre at the moment. And what I would really not want to see is the council dispose of properties with a view, obviously, for gaining resource and gaining money, which is right. Will that go to somebody who may well then choose to flip the asset into residential or permitted development or whatever they might choose then to do with it? That would be a policy thing that we would not want them to do. I know that's not where your head's at, John. I totally understand that, but it might be an unforeseen consequence of something we don't want, really. So, yeah, consultation would be welcome.
Okay, thank you, Councillor Harvey. And I agree with the thrust of what you're saying, and we do make sure that we talk to ward councillors in particular if we're going to be looking at any disposals that in their wards, particularly community assets where there might be, say, redevelopment, particularly for housing uses. And yeah, we're conscious of the issues that surround PDR, and so we seek to, where we can, where we're in control, and then we seek to make sure that is not the outcome that occurs. As to we will be working with JLL and the property team on putting together the list of disposals, and I don't want to be tied to having to refer back to the committee on this, because we may want to get on with it, but we will keep you informed.
Thank you. Councillor Cubitt is now going to tell me that we should be investing in a retail park.
No, I'm going to completely echo what Sue says, which is in view of the fact that we have a very, very large commercial real estate portfolio. Additional exposure to the same sector is probably not something we should be aspiring to. Just very quickly, page 131, I'm sure there's a completely simple reason and I'm being very stupid, but in 1.3, it says that our investment portfolio is 279 million and the rental income 16.3. And yet in our previous paper, 116, it said that the portfolio was 272.90 million with a rental revenue of 15.54. The difference is 6 million, so it's not the property investment, and the difference between the revenues, not the additions, because I've also tried to do that to try and reconcile it, because if you add the projected revenue from the property investment, it comes to 17 million. So
right, Annalie, just ask the question. What a difference.
Shall I pick that one up, Councillor Isaac?
I'd be delighted if you would, Sue, because I think you're more likely to be able to answer it than me.
They're 2 different financial years, so we can probably tidy up the property investment strategy before it goes to Cabinet, so they're consistent.
Thank you. Councillor Cubitt, do you have anything else?
So the figure of 272 is for this year, and the other ones for the year before?
So the 279 is as at March 20.
Okay, cool. Okay, brilliant. And then there's just well, I'm just being completely, but I might as well just flag it. There's a typo on 4.1. We'll seek to deliver and delete of. But other than that, brilliant. Thank you very much.
Okay, Councillor Taylor.
Thank you very much, Chair. Obviously, I appreciate this bit of work ongoing with JLL, but how soon do we think we might have a sort of a target list of disposals, as it were, and an idea of what that might yield us? And I'm thinking really in terms of how do we use that, or could we use that, or is it even likely to be sufficient to use to support what is going to have to be some significant rebuilding and regeneration of the local economy, and given the effects of the pandemic? I mean, whether that's at the top of town or however, but is there sufficient in that and in a sufficiently short enough timescale to enable us to do some joined up thinking with helping with rebuilding the local economy and local businesses that have been, you know, suffering and putting something back in its place? Otherwise we could end up with a very empty town generally, you know, not just town centres but business parks and so on. Can we do that kind of joined up strategy?
Yeah, absolutely. It's how we're looking to approach this, and it's been the way we've been looking to work for some time. So I think to answer your question directly, I'm expecting JLL to be reporting back with our officers in the next few months in relation to the first potential property disposals. I think we have to be careful about not sort of expecting there's going to be sort of a huge raft of disposals. You know, a lot of the properties we hold for very good reasons, and there's also the case of the timing of disposals. You know, we need advice on what is the best time to dispose of assets. But one of the key priorities will be to look at opportunities to enable investment into the borough, particularly at the time, given all that's happened as a result of COVID. So we'll be looking for opportunities to bring in investors, particularly in terms of regeneration on further regeneration on Basingview or top of the town. And if there are sites that we're holding that have not been built on, then I think it's incumbent on us to look for opportunities to bring in third parties to build those out, as we've been doing recently, for instance, with the Sony site.
There's been some talk about corporates moving out of London and relocating in areas such as Basingstoke, so we could see some demand coming from that.
Yeah, well, anecdotally, I've had reports that a lot of these companies are seeking to accommodate smart staff in smaller units outside of London. And because Basingview has a lot of short-term office space that's available and more coming on stream, those companies are receiving a lot of inquiries at the moment, and their vacancy rates are quite low.
Good. Officers tell me that JLL are likely to be reporting to Cabinet in February and talking to us in March.
Yep.
So that's certainly the timescale we're looking at.
Well, if officers say that, it must be right.
So I wasn't aware they were going to Cabinet. I assumed that they were going to report to SMB during February, and then and Property Board, and then we would be coming on to Audit Accounts Committee for a presentation in March.
Thank you, Sue.
That's my understanding as well. Yeah.
Okay.
Sorry, just one last thing I forgot to ask on Appendix 1 was the table of acquisitions on the property investment strategy. Because I believe that I asked previously for the net IRR to be given. And what we've got on this table now is the net initial yield, which I had to Google because I don't profess to be an expert, but I understand it's very different to a net internal rate of return. So I don't know, was there a reason why NIY was put in? And is it more beneficial to us as members to understand, or is it just, would it be better for us to have the net internal rate of return?
I'm not sure I can answer that one. Sue or Martin?
I think Martin put it in. Martin, are you able to answer that one?
I'll have to come back to you, Councillor Cubitt, on that, just to sort of make sure I'm 100% correct.
Okay, I can go to all members, not just Onley.
Yeah.
Okay, I've got no more hands. So I think our comments can be passed on to Cabinet, and John has taken them all on board. Thank you, John.
Thank you, Roger.
And as Mr. Gundry and Mr. Bevan decide they are going to join us at the very opportune moment as we get to item 11, Internal Audit Progress Report, September to December.
Thank you, Chair. That'll be me presenting. So this is the progress report for the work completed by the internal audit team during September, December last year, and also includes the current position with outstanding audit recommendations. So on table 4, paragraph 4.1 on page 147 of the report shows a summary of the reviews that we've completed. Of the 5 reviews, you'll see 2 we've given substantial assurance and 2 we've given a reasonable. The IT network integrity audit, we split the assurance this year to give a substantial for the technical side on the IT network, but a reasonable on the side of staff and councillor awareness of phishing emails and scams. So the summary reports of those 5 are shown in my appendices, appendices 2 to 6 of that report. The other thing on recommendations, paragraph 4.2, I show the latest position with outstanding audit recommendations where the agreed actions with officers have yet to be completed. They're detailed in appendix 1 of my report, starting on page 151. So I hope the report's fairly self-explanatory, so I won't add anything else. Other request, the report is noted. Thanks, Chair.
Richard, was there any update pending coming up through after the report was published on the outstanding recommendations?
No, we received haven't received any further updates, Chair, on any of those recommendations since our meeting on Thursday.
Are there any overdue recommendations that you're concerned about?
We're always concerned when they're overdue, but I mean, obviously we keep a tight look at, keep a chase on the fundamental and significant recommendations. We have made allowances this year for colleagues and other services, their priorities being elsewhere, what with the pandemic. So you know, there are overdue recommendations in the parking property areas, but we are chasing them. There are some where we've had more recent updates than others, but but I can only report on what the information that we're given.
Thank you. Anybody want to go into the reports themselves or look at the outstanding recommendations? Councillor Vokes.
Thank you, Chair. Thank you very much, Richard, for the latest update column, because my memory of the last time we took this report, you had sort of struggled to get a lot of updates. So this is a much more informative report. So I'm very grateful for that. I am worried about the three fundamentals on page 152, I think it is. Yes, 152. The business continuity, particularly, because I can't see why that wouldn't be considered to be such an important thing as we're going through a pandemic, when business continuity is absolutely fundamental to what we're doing. And I read in the report, you know, that people are saying that their business continuity plan has worked and it's all going well. And then in other bits it says, well, it hasn't been reviewed. And so I'm surprised that board hasn't been reconvened, or at least that's the way I read it. And I wondered whether we should be considering escalating that as a matter of concern if other members felt similarly. And I was also worried about the IT software licensing, because other parts of the report talk about Teams and Zoom in our Virgin internet. And, you know, it feels like there's a risk that we inadvertently don't renew licenses that then stop and we're in big trouble, or other things go wrong. So I just wondered if you had any comments on those two.
Mr. Gundy's waving his hand there frantically.
Sorry, Richard. I'm just going to take the business continuity one first, if I could, and I'm sure Sue might mention.
You're quite faint, Paul.
Apologies. Is that any better?
Yeah, lovely.
I'm just going to take the business continuity one first, and I'm sure Sue might mention something as well. But we do have a pandemic team, stroke board, who meet very regularly, which, in terms of the business continuity board, in the current climate, effectively does the same thing. So from a chief internal auditor point of view, although we have the outstanding recommendation, I'm comfortable that we have alternative arrangements in place.
Okay, thank you.
And on the issue of the software licensing, I mean, it is a project that is ongoing. There is work going on between IT and the procurement team, you know, in line with the ERP project, which, you know, it is a longer term issue. We have had a lot of the software licensing. It stems from historically the process of procuring IT systems and software was a bit ad hoc previously. We've now got a more focused and consistent approach to how we do it. It's just pulling in the information. And again, obviously our IT team have been right at the center of the pandemic. So, you know, resource has been, priorities have been elsewhere. So that is certainly a factor. But the work, you know, as Paul said, he's confident with the business continuity. We're confident work is being done, but obviously, you know, it's perhaps slower than it would have been. Okay,
Sue's wanted to speak.
Yeah, so if I could just pick up those 2 points. In terms of business continuity, yep, agreeing with Paul. SEMT, which is the Strategic Emergency Management Team, meet twice a week. And we discuss all service issues and any issues in terms of being able to provide business continuity. I think the fact that as a council that we are still providing all our services by default means that business continuity is actually working. We have had to tweak it through the pandemic, and at some point we will need to update the business continuity plans post-COVID. And it's those business continuity plans that haven't necessarily been updated at the current point in time, but that doesn't mean we're not testing or actually living through those business continuity plans. So it's just the fact that it's a fundamental audit recommendation, that recommendation is around making sure on an ongoing basis we have the board and we actually have those business continuity plans updated. And as both Paul and Richard have said, it doesn't mean we're not. It just means that the formal recording of business continuity plans going forward needs updating. And in terms of the proposed centralisation of software licensing, etc., The digital programme is still being advanced. That whole suite of the portfolio of all the different software and systems that we currently subscribe to have been noted. And then there is a piece of work now subsequently that once IT emerge, as Richard has said, from all the activity they're taking around the COVID pandemic, we will look at each of those systems in turn and which ones we will or won't replace going forward, and which ones will be absorbed into some of the new systems they're purchasing. So a substantial amount of work has actually happened. It's just the specific recommendation about centralising them has not been put into place at the current time.
Thank you.
So, Chair, if I could just come back on that. So, where we've got references to Teams and Zoom, for example, on page 154, IT critical systems, are we taking a risk-based approach with our IT systems, that those where they really are business critical? Are we, making sure that they have got all licenses are being up to date, and we've got backups and all the rest of it, because that's where we're vulnerable, isn't it? That when you're in a system of change, when things have been dispersed and then they're going central, there's this period of time when things go, oh, they're doing it, no, they're doing it. So
I would say in things like Teams and that, I've got no concerns over the licenses that we hold. This is more about these tiny little systems that individual services might have purchased, and the IT team don't necessarily have sight of them. Okay. But that piece of work has now been completed in terms of identifying them all. But the activity around whether it should be centralised or not, that decision has not yet been made. So whilst that was an audit recommendation, the decision hasn't been made that we're necessarily going to centralise it. Okay. The assumption is we will, because that's probably a more efficient way of managing it. But the activity around identifying the portfolio has been completed. We haven't actually moved that forward at the current time because the IT team are actually inundated, obviously, with COVID response.
Sure.
Mr. Gumby wants to come in.
Yeah, thank you. Just in terms of Teams, I believe that all Microsoft software is wrapped up into one license agreement.
And the issue with Microsoft licensing, it's something audits we've done down the years, something our IT have been hot on. They've been very, very good with the actual Microsoft licensing side of things. As Sue mentioned, it's all these disparate systems that we've accumulated over the years that kind of need controlling. Microsoft stuff, yeah, we're more than happy that we're on that case.
That's really helpful to understand the difference between the major stuff and yeah, I absolutely understand how there's always a proliferation of all sorts of different little bits of software and systems that come out of nowhere. So that's a really helpful update. Thank you very much indeed. Okay,
can we note the report? We've noted the report. Thank you very much.
Thank you, Chair.
Thank you, Chair.
Well done. And welcome, Fiona.
Hello, good evening.
Right, item 12, social networking sites, viewing thereof. And there are approximately 5 that we have looked at, none of which look particularly contentious. Happy to note. So on to agenda item 13, breaches reported to the ICO. No serious breaches have occurred since the last report. However, there are key issues for consideration, which Fiona's going to tell us about.
No. Sorry. I was getting prepared to tell you all about the EU and leaving the EU and all that, so apologies. Yes, that was the issue, wasn't it? Yes, just the report just provides you with an update on the position regarding the transfer of personal data from the EU to the UK post the 31st of December. To allow actually the free flow of personal data requires an adequacy decision by the European Commission. So basically checking out that the UK legislation is adequate enough for the EU to allow the free flow. As part of the EU-UK Trade and Cooperation Agreement, They've agreed a further transition period for another up to 6 months because we weren't quite in the position to agree the adequacy decision. So during this time, they'll be looking at whether our UK legislation, which is now UK GDPR, is adequate for that free flow of information. So it's sort of kicked down the road for a few more months. Thank you.
Everybody understood that? Your hand.
Yeah, sorry. It's a little bit complicated, this, Fiona, and I don't know. I mean, I'm conflicted, but it states that there's been no serious breach. And of course, the subjectivity is the word serious, but I am actually, I've actually made a formal complaint to the ICO about what I consider to be a serious breach committed by somebody in the council. So the council's aware of it, and the council's aware of the breach. But I don't know why it wouldn't need to be reported in this policy.
Yes, yes, I'm aware of what you're talking about, Councillor Cubitt. The council has decided not to report any breaches. Obviously, there are other matters going on outside of that process. I don't think it'd really be very appropriate to air them here and now.
Okay, thank you.
Okay, everybody content? We'll note that. Which just leaves us with the March meeting. Pretty straightforward. Internal audit progress report, the risk register, the internal audit plan for 21-22, Treasury Management's Q3 report, EY external audit plan for 2021, and the property investment strategy monitoring report for 2021. And we can add to that, I believe, that the new consultants will actually be attending the March meeting. So that is certainly, I've got a nod there from Sue, thank you. And that will be our March meeting, which will be the last of the year, God willing. And hopefully there will be elections in May and I can disappear off into the sunset. Stop shaking your head, Kim. Thank you very much for attending. And just prior to, what was it, 9:29? We managed to get it completed before I had to extend standing orders.
Thank you, Chair.
Thank you. See you in March.